Hello, Maverick Traders. Welcome out to your currency recap for August 26th. Corey here with you. We're always going to take a look at meaningful news and where markets are rotating. There's capital that's on the move. We want to know what's uptrending, what's downtrending, and then highlight our very best ideas, be it currency pairs, crypto, whatever is moving, whatever's trending and has that strength and volatility, we want to be there.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So markets have been in this little recovery rally after a couple of weeks ago where we had a big uptick in volatility. It's kind of died down as the markets have grinded back, so much so that the Dow Jones Industrial Average hit new all-time highs today. The S&P is close to that, just a couple of percent away. The NASDAQ is a few percent away. So NASDAQ and tech stocks have certainly lagged on the rally. Oil was up by over 3% today as Libya cuts production. Remember, this is not a long-term issue in all likelihood because where Libya cuts productions, other countries can increase production. So it could be a short-term issue, probably not a long-term issue for oil. And then US dollar weakness is certainly pricing in future rate cuts. Remember, when the markets realize that the Fed is changing policy, usually that goes in trends. So if they're in a rate cutting cycle, they're not just going to cut rates once and that's it and they're done. They're going to cut and then more cuts will come and more cuts will come. And so the US dollar is certainly getting out ahead of that, starting to price that in, it would seem. Now, as we look at today's price action, US dollar was fine, up very slightly. CAD was an outperformer, and again, I think that was linked to the move in oil. Aussie and Kiwi lagging a little bit, so you could say, well, a little bit of a defensive day, a little bit of a risk-off day, but nothing too major happening that way. Again, as far as volatility, oil was up big, but nothing else was really moving all that out of the ordinary. Crypto down a couple of percent, which for crypto, not that big a deal. The laggard here was Bitcoin Cash, and we're going to take a look at that chart. Again, I think that's correlated a little bit more with the US dollar, and so that could be related to that and the inverse to the oil move. Now, as we look at equities, the trend is up. Here's where I see the chart. So the S&P 500 is back up towards the prior highs. And some people might look at that and say, well, what if it starts to fail here and pull back? And then they would start to clamor, oh, this is a double top and all hell's going to break loose. And that's not usually what happens. Even if we pull back here, what would normally occur is more of a cup and handle. So I would say even with a pullback, my instinct would be around 5,500 to look for a buy setup. To expect, sure, there's zig and zags, right? So we could pull back a little bit, but watch for a buy setup at that 5,500 or so level, and it would create that cup and handle effect. Now, if it were to break below 5,500 and get down here, start to pierce some moving averages, etc., then you've got a bigger problem. Then we're not holding where the cup and handle area is, and that's a zone where if we start to trade down below 5,500, then I would start to anticipate more weakness, more follow through. But it gives you a good line in the sand and good area to look at. I think above 5,500, we stay bullish on this market. Now, for this week, tomorrow we've got consumer confidence in the U.S. Tomorrow night, we've got CPI out of Australia. Here in the U.S., we've got preliminary GDP on Thursday. Markets, it's hard for the markets to go down into a big bear market when the economy is still chugging along at positive 2.8%. GDP out of Canada, totally different story, up 0.1. Core PCE, which is an inflation gauge, expected to come in at 0.2. That's not that big a deal. I mean, if we think about that on a monthly basis, If you have 0.2% for 12 months in a row, that's 2.4% for the year. That's right around the Fed's target of 2% inflation. So we've certainly seen inflation come down, be a little bit more contained, and that's part of why the Fed feels like they can start to cut rates. Now, if we look at a few charts and possible ideas, here's a few things that stood out to me. This US dollar chart, once we broke support over here, you can see the floodgates just opened up. We broke support, kind of retested it, the old kiss goodbye, old floor became new ceiling, and we've just been in sell-off mode. So are we down a lot? Yes. But what tends to happen in currencies is they can just run. So even with pullbacks and consolidations, my instinct would be to continue to stay short and bearish on the US dollar for the foreseeable future. Hopefully we get a pattern, a pullback, a consolidation, something that we can trade off of, but continue to look for it to have more weakness. The CAD started to stabilize today, again related to oil, and the CAD is back down to that couple of Mondays ago volatility day. So now we're retesting that. Is this simply a basing pattern that's going to break to the downside, or do we just continue to trade inside of this base? Watch for CAD over the next couple of days. If we take out that low, this low that was established right here, bad news for CAD, bad news for Canadian dollar versus most everything. So I'm going to be watching that CAD to make sure that it doesn't pierce that support level. If we're looking in crypto land, the two favorites for me on the short side are Litecoin, which is starting to roll over. Actually, kind of a bearish Bollinger Band setup where you're staying below the 50 period moving average, but kind of short-term overbought. So Litecoin looks like it wants to trade quite a bit lower. And then Bitcoin Cash, same thing. Looks like a little false breakout above the 50, and now we've gone back below. From false moves come fast moves. My favorite shorts are in crypto land. So expecting more downside in crypto and really looks good. So US dollar weakness likely to continue. Looks like to me cryptocurrencies for the next week, 2 weeks are probably going to have some pretty big bearish moves. Continue to play that relative strength, relative weakness, proper position sizing, and we will see you all next time. Goodbye, everyone.